In this video, we will continue on Chapter 9, page 275. We had just looked at the balance sheet, and now we are moving down to the second beige box on page 275, which has a new objective of to reclassify the $10,000 as unearned revenue at 3/31/13, and then reverse the reclassification as of 4/1/13. Okay, so number 1 says click company and then click make journal entry. Type 3/31/13 as the journal entry. 19 should appear. Select accounts receivable as the first account. Type 10,000 as the amount in the debit. Select performance rentals. Anytime we hit accounts receivable, we will need to have a customer so that QuickBooks can then make a subsidiary ledger to the accounts receivable ledger, which will be in order by customer. So therefore, we need the customer in there anytime that we do something to accounts receivable. Number 7, type unearned revenue as the second account, and we are going to set up that account and then select other current liabilities. So let me give a quick explanation as to why we are doing that, and then we will do that. I'm going to close this one, go back to the trial balance here, and you'll notice up here in accounts receivable, which is here, people owe us, customers owe us $320.707, and that is nice. If I want to see that in terms of who owes us the money, I can then go down to this report here and go down to customers and receivable and take a look at the customer balance detail, like so. So here are the individuals that owe us money, and we note that a couple strange things happen here, and that is one is here where Buena Vista has a negative amount there. So the bottom number, of course, is what would be on our trial balance if we had the same dates, which was 03/31/13. So we have the 389,932 is what is owed to us. But we have a couple balances here that have these negative amounts in them. Here's one here. So for performance rentals, looks like we owe them money. And the reason this happened is because we collected a security deposit. Now, the proper use of a security deposit would really be to put it in as a liability, not a negative receivable, because what it is it's money that we owe back to the customer, or we owe them a boat. And so therefore it should not be in the receivables. We should have debited cash and credited unearned revenue until we complete the job of giving the boat, thereby earning the money. But in practice, oftentimes companies will put the deposit into the receivable accounts just so that we can track by customer using this same customer balance or subsidiary type ledger. So this is really improper in terms of an accrual standpoint, but it's very useful and convenient in terms of matching up the deposit with the future invoice. So we're going to do that. We're going to do it this way, and then whenever we do the financial statements at the end of the year, we're going to go through this report. We're going to look for all the deposits. We're going to take them out of accounts receivable by increasing accounts receivable with a debit and putting them where they really should have gone in proper accrual, which is a liability. So that's what we're doing here. So we're going to go to the company. We will go then to journal entries, make journal entries. And number 2 then said that the date should be 3/31, like so. The number 3 says 19 should show up, as it did. And the first account will be accounts receivable. That's what number 4 says. And number 5 says we're going to debit it for 10,000, which is that negative amount, which was for the name of customer being the name, performance rentals. And the credit will then go to unearned. Oh, and that's a new account, so I'm going to type it in there. Unearned revenue. And then we're going to hit tab. It's going to ask if we want to set it up, and yes, we do. Tab. Do we want to set it up? Unearned revenue is not an account list. Set it up, please. And the type of account that we want this to be will be the other current liabilities as instructed on number 9 of page 275. Turn into page 276. We're going to continue, and that's it. So that's what we want. Okay. Okay, next page. Verify unearned revenue as the name. Number 11 says hit save and create this new account. Okay, then type 10,000 in the amount in the credit. Select performance rental as the name, and type save and new. Okay. So there we go. We could type performance rentals. It doesn't matter as much in this account. And we'll hit save and new. Warrant transactions to the accounts payable must include a vendor. Well, I was lucky they got me on that. It was accounts payable. It should be accounts receivable. You may have been wondering. Should be accounts receivable that we're talking about, not accounts payable. So sorry about that. It should be accounts receivables being debited, unearned revenues being credited, performance rental is the customer. If it was accounts payable, then we would need a vendor, and that error actually helped us out there. All right. Back to the book. So it says hit save and new, and then type 4113 as the journal entry. And then type 20 should appear as the number of the journal entry. Select unearned revenue, type 10,000. Number 19 says select performance rental. Number 20 says select accounts receivable as the second account, and then accept. All right, what we're going to do, let's explain that real quick. If we look at the trial balance at this time, we can see that accounts receivable, we just put that 10,000, increasing that amount. Now we're going to take it out as of 4/1. So we made it correct as of 3/31, our cutoff date. And now we're going to reverse it as of 4/1, because in practice, we really want the accounting department to do it the way they have been doing it, with a negative receivable, so that we can match this thing out. We can match the customer's invoice to the deposit. So we're only going to do this to make it right when we make the financial statements on our cutoff dates, which in this case will be the end of the month. So we're going to reverse it. And so number 15 says make sure you're on 4/1 as the date. 20 should pop up. That's what number 16 said. Number 17 then says select unearned revenue. Unearned revenue. And 10,000 in the debit amount, so we're just reversing what we did last time. And then they want performance rentals. We really don't need it here, but we definitely need it in the next part. Number 20 says accounts receivable, and we want to accept the 10,000 as the amount in the credit, so that is correct. In this case, we definitely do need a customer of performance rentals, because anytime we hit accounts receivable, QuickBooks needs to put it on the subsidiary ledger, which is by customer. And then it says to save and close. So of course, now if we look at the receivable account, we took it out as of the 31st, this 10,000, and reversed that as of the 1st, and thereby making it correct as of the 31st, and reversing it the first day of the next period. All right, let's take a look at the next page. Page 277 says to print the journal for March 31st and April 31st. So you'll notice that the last time we looked at the kind of account that's going to help us check our work, and really the biggest accounts to check our work is going to be this one when we do the journal entries, and last time it was that transaction report by date. So we're going to print basically our adjusting journal entries. All right, so number 1, click reports from the menu bar, click accounting and taxes, and then click adjusting journal entries. Number 2, click the Customize Report button. Number 3 says click Display tab, and then uncheck Memo and Number fields so they do not show on the report. Type 3/31 as the form date, and from date, and the to date. Number 5 says click the Header Footer tab, then uncheck Date Prepared, Time Prepared, and Report Basis. This book really does not like those things to be on the report. Number 6 says click OK. Number 7 says click Print. In the report toolbar, choose landscape orientation and then print. So I'm going to practice basically exporting this to Excel rather than printing, because that's the suggested format to use when working the problems in the book. So number one said go to report center. So report center's up here. And then we want to go to accounting and taxes. Why is my computer thinking so long? Alright, so we're in the standard form. We're going to go down to accounting and taxes. I'm going to view it as a list too. Lists. Then we'll go over to the accounting and taxes here. We're in the standard area, by the way. And then we want the adjusting journal entry. So here's the adjusted trial balance, adjusting journal entries. Going to run that report. And QuickBooks combines multiple items in the transaction. That's great. Okay, I'm going to make this large. And number 3 says click the display tab and then uncheck. Oh, okay, number 2 says click the customize report. So let's select that. Number 3 says click the display tab. So we are on the display tab, and then uncheck memo and number. So this gives us the headers right here. So see how we have these headers. So we're going to remove the memo and number. And the other way you can do that, by the way, is if you just was here, if you were here, you can put your cursor there and just close it out like that to remove it. So that removed the number. Going back into customize, type 331 as the from date. So we're going to go here and we're going to type 033113 and 2 and the to date 033113. Okay, and then number 5 says go to the header and footer tab up at the top and uncheck the date prepared, the time prepared, and the report basis. Number 6 then says click OK, like so. Number 7 says print the report. So here's all the journal entries that we did. So what you want to do is compare your journal entries to the journal entries here and just tick and tie them off in the book. So if your balance sheet was off anywhere, the place that it was off was probably here. The most likely error is that we entered a journal entry that should have been in March in April, or a journal entry that should have been in April in March. It's probably a date error. So go through here and just tick and tie these out to what is in the book, and if they tie out, then you are probably okay. So let's print this thing. I'm going to export it because that's what we want to do on the homework. So this is how easy it is to export. We just hit the export button. We're going to create a new worksheet like so, and create a new worksheet in a new workbook. That's what we want. Going to go ahead and export that, and it should just open up Excel and create a new worksheet in a new workbook. My Excel's blinking down there, so I think it did something. So then I'm going to go over here and I'm going to double click on the tab that it just created. Double clicking on that tab so I can rename it. And I'm going to name it ADJ Journal Entries, and then the date 03.31.13. Done. Then I'm going to save that. File, save as, browse. Somewhere on my desktop I have a location, and that location is AC 1320. Then we are currently in week 4. I'm going to make a new folder called New Folder Week 4. Double click on that. Call this just Chapter 9 and save. And there we have that. Now I'm going to close it so that we can upload another report if we so have one, and I believe we will. We're going to go to the next page. Number 8, type 4113 in both the from and 2, text dates, and then click refresh. Number 9 says click print. Alright, so now we're gonna do the same thing, except that we'll have April 1st as the date because those are the ones that we reversed. So let's do the same thing. We're just going to change the to and from date to 040113 and 040113 tab. And of course, these are the items that we reversed. And of course, what you want to do is just tick and tie these out. You should be able to just tick and tie these out like so. Boom, 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 boom. And if there's any differences, then we can probably locate those differences here and adjust them with relative ease at this point. Alright, let's go ahead and I'm going to save that to the same Excel workbook by hitting the Excel button here. And in this case, we do want to create a new worksheet. This is a little deceiving. We're not going to create a new workbook. That's the actual name of the file, but we are going to create a new sheet within the workbook. So then when it goes to the second thing, we want to have it in an existing workbook. So the workbook is like a document file for Word, so it's a workbook. And then we will browse for the workbook that we just set up, which mine was on the desktop. Then it was under AC 1320. And then I put it into week 4 and called it Chapter 9, so named because of the chapter that we are currently on. And then we'll export that out. For some reason I have it going to the 4th, but it should be the same anyways. And then I'm going to go down here and rename it. So we just created this one. Double click on it. I'm going to call it ADJ Journal Entries as of 04.01.13. And there those are. Closing that, saving that, going to the next page, which happens to be page number 279. And the next page box has another objective of to reconcile the bank statement as of 3/31/13. Okay, so this is the second most important thing to do in an accounting system is to reconcile the bank account. So even if we had timing errors, even if we didn't understand this whole adjusting process, we would have timing differences, but it would still be okay in that we at least would be fairly confident that we have all the information in there somewhere, even if there's some mispostings or some timing differences. If, one, we have the double entry accounting system, which we know we do because QuickBooks forces us to have it, and 2, we know that all the transactions have basically been recorded, which we can basically verify by reconciling the bank account. So many of the accounts that we do are going to go through cash at some time, and as long as we can tick and tie everything that goes through cash, then we can feel confident that the accounts are correct. Now, of course, in real life, this is not exactly the way we would do the bank rec. We would have the bank rec. What would happen is we'd get a statement at the end of the period, and we would just tick and tie out what was on our books compared to the bank statement. I'll try to show you that as we go. The book problem, of course, is going to back into it a little bit, and so it'll be a little bit different. I'll try to explain that as we go. So what we're going to do is we're going to click the Reconcile the Banking section of the Home tab. We're going to select the Bank of Florida. We're going to type 3/31/13 as the statement date. We're going to type 47,172 as the ending balance. We're going to type 75 as the service charge, 3/31/13 as the date, and bank service charge as the account. Then we're going to type 125 as the interest earned on 3/31/13 as the date, and interest income as the account. Then we'll hit continue. So let me walk through that. So number 1, click reconciliation in the banking section. So if we're on the home tab, we can then go to the banking section and we could go to reconciliation. I would normally go to banking up at the top and reconcile right there. Okay, and then we're in the Bank of Florida, so that's the bank obviously that we are going to reconcile. The date we're going to reconcile at is 03/31/13, that's number 3. And you can see that there's a beginning balance of $25,000. Now if we had the bank statement, it would basically say the beginning balance is 25,000, then it would have all the activity, and then it would have the ending balance, which the book tells us is number 4, 47,172.23. So if we take the beginning balance of 25,000 and we tick and tie everything that's on the bank statement out, which is the difference, then we have to reconcile. So anything that's on the bank statement we want to find on our books. If we do that, then we'll reconcile. Anything on our books that we didn't find on the bank statement are going to most likely be outstanding items, such as checks that have not cleared the bank. So if we wrote a check and it had not cleared the bank, that's okay. We just want to know why that difference is there so that we can feel confident that all items have been recorded properly. So that's how it would basically work. Now these items here, service charges, if the bank charged us some kind of service for checks or something, that can go here. So we're going to add that because of course we never recorded those service charges because we didn't know about them until we saw the bank statement, and now they charged us for checks or something, and we're going to have to reduce our bank account, crediting our bank account by the $75 that they're charging us for on those checks. We're going to put those in there as of 03/31/13, the date of the bank statement, and the expense accounts we will charge for it is going to be bank service charges. We also could have interest income. So number 6 says that we have interest income of 125. Once again, if the bank basically gave us interest on the money in the bank account, then we wouldn't really know about that till we got the statement. Therefore, it would not be in our books yet, and we can actually record it now as we go by putting it into the interest earned and typing 03/31/13 as the date, the credit being interest income. Number 7 then says continue. So then we can continue on this. When the Reconciliation Bank of Florida window appears, click in the box at the top of the page that says hide transactions after the statement date. Okay, that's what number 8 said. So let's do that. So notice this has all transactions, meaning it looks like this is the first time we're basically reconciling for the whole quarter here. And there's activity after the 31st. Now, it's possible, we don't want to have any activity after the 31st because obviously the bank statement is as of the 31st. So we're not going to check off anything after that date. So we can click this button here, which will remove everything after the 31st, like so, and now we no longer have those items there. Okay. Then number 9 says place a check mark next to all the checks and payments in January, February, March, except check number 1038, 1039, 1040. These are the payroll checks issued on 3/31 that have not yet cleared. Number 10, place a check next to all the deposits other than credits in January, February and March 2013, except for the $7,264.93, date 3/27. Your screen should look like this. Okay, so let's do that. Now, again, in real life, what would happen is I'd have the bank statement over here and the check over here, and I would check this and highlight the bank statement. Check this. I would find all of them individually, and this, you actually have to do this. And if you find everything from the bank statement on the books, then it has to reconcile. What we're going to do is back into it because that's what the book told us to do. So I'm just going to mark all like this. And so now it marked everything. And then we're going to go back and see what we did not find on the bank statement. So the book says that specifically the bank statement did not include 3 checks that are here that we had written. And those checks being check number 1038, check number 1039, check number 1040. So these are the 3 payroll checks. We're going to uncheck those because they have not yet cleared. Now this would make sense because of course for a check to clear it could be a good month or 2 months old and not have cleared the bank depending on who we sent it to. So just think about what has to happen before the check clears. We have to write the check, we have to mail the check, the other person has to receive the check, they have to then open the check, they have to then deposit the check, then the check the bank that it got deposited into has to contact our bank in order to process the transaction. So it's very possible that we have checks that are going to be outstanding. That's not unusual. If they're old and outstanding, then we may want to double check them. We may do what? We may call the bank and say, hey, did check number 1039 clear as of April? And so we can do that because, of course, as we're doing the bank reconciliation, it's not actually 331 right now. It's sometime after 331 when we received the 331 bank statement allowing us to do this reconciliation process. So we have the power of hindsight right now, meaning that we can still call the bank and say, hey, did these things clear as of the next month, April? And they can tell us, and that's cool. So we're not really worried about these three yet, though, of course, because we wrote them on the 31st. They didn't have time to clear, and that's okay. On the deposit side, however, we have this deposit down here for 7264 that we are going to uncheck. And that one isn't too old, but it's a little worrisome because you would think if we went to the bank and deposited it on 327, in today's world it shouldn't take more than a couple days, 3 days max, for it to clear. So the fact that this isn't cleared and it was deposited on the 27th, it's a little odd. So we might call the bank on that one again and say, hey, did this clear as of April 1st? And if it did, then that's cool. It's just outstanding. Now, of course, we're going to record this stuff when we wrote them, not when they clear the bank, because it's not like if we wrote the rent check today, even though it didn't clear the bank, it's not like I can go out and spend the rent money. We need to plan on the fact that we wrote the rent check, you know. So we're going to record it when we write the check, and we're just going to recognize that it's not going to clear the bank until it clears the bank. All right. Moving on, number 11 says, note the difference is 0 now. Is that correct? Okay, we have a difference of 0, meaning it has reconciled correctly. That's good. That was a little worrisome. I was a little worried. And then click Reconcile Now, and number 13 says, click OK in the information window, and then click the Summary button. All right, so let's do that. We're going to say Reconcile, and it'll take its good time there. And it says to hit the summary. I'm gonna show both of them, and I'm gonna display them. So I'm gonna display the bank reconciliation. So this is a summary of the bank reconciliation. What this means is that this is what we started with. This was the cleared balance. This was the activity that cleared. So here's the cleared balance at the end of the period. So here's the cleared balance at the beginning, March 1st. Here's the cleared balance at the end, March 31st. And here is the outstanding items. So what's the difference between what's on the bank statement here and what's on our register here, meaning what's on our bank account? If we looked at the trial balance, this is what's on our bank account. That's here, and that didn't tie out to what's on the bank statement here. And the difference is 3 checks and 1 deposit. So we know exactly what the difference is. Therefore, we feel confident that we have recorded everything. So this is the summary balance sheet, and you can also see the detailed one here. So this has all the checks that cleared, and here's the cleared balance, this 47, and then here's the 3 checks that are outstanding, the 3 payroll checks, and here's the deposit, and then here again is the our balance. All right, what else would they have us do at this time? Going to the next page, 281 says click print button and then print again. All right, so let's just put this to our Excel document again, because that is the recommended format for these problems. So we will just hit the Excel here. Once again, I'm going to create a new worksheet within the existing workbook. Then we're going to go down here and want it to go to the existing workbook. It should go exactly where we want it already. So it's going right where we want it already, and that is great. So I'm just going to double click on the chapter 9 and go ahead and export this one. Should then open that file, and there it is. Now we just need to rename that tab by double clicking and calling it, I'm just going to call it a bank rec as of 03.31.13, and there we have it. Close it, save it, call it good. Next page. So there it is. Close the reconciliation window, and that is the end. So that completes the workbook section of Chapter 9.